InsureMO offers a middleware platform as a service, enabling the rapid launch of insurance products across digital distribution points. They are on a mission to make insurance easy, offering a wealth of insurance APIs that provide quick access to services, brokers, vendors and clients in a safe and efficient way, helping insurers to accelerate the digital transformation. With insurance becoming more and more connected to all kinds of ecosystems, what will be the role of insurance companies? Today, InsureMO will share their vision on who will control the insurance industry of the future and how insurers can add value and take control. Next on stage, InsureMO.
Good morning. Thank you very much for your time to be here. I'm Woody Mo. I'm the CEO of InsureMO. At the same time, we also have a company called eBaoTech. For some of you may know that. We are also so we have two kind of line of business. One is the middleware, one is the more the application traditional core system business. InsureMO is really trying to be the operating system of the insurance industry, a platform for everybody, not just only carriers, but an ecosystem. So over the last 7 years or so, we have been doing a lot of business powering ecosystem to do insurance business. So that became a very good observation for me personally to see how this industry is going to shift from more carrier control to potentially more ecosystem control as the connectivity become more and more the norm. So as a result, we are doing this chat with a very valuable customer of ours, Ageas. Vela Marini is the head of the digital transformation of Ageas Group. And I'm very honored to have him as a guest of this chat. And maybe I will pass you to introduce a little bit yourself.
Thank you, Woody. Hola, Barcelona. My name is Valer. Very honored to be here. I'd like to see a show of hands. How many of you have heard of Ageas so that I can calibrate my message a little bit? Okay. I'll keep it very short then. I think there is some basic awareness. We are a Belgian-based group with 200 years of heritage, present in some European markets, Portugal, Belgium, obviously, and the UK and Turkey, and very much in Asia through joint ventures, not under the Ageas brand, but under brands with partners in the banking sector in China, Malaysia, Thailand, Singapore, Vietnam, and the Philippines. As I mentioned, a company with 200 years of heritage, with 16 billion inflows, 47 million customers. So we are kind of under the radar in Europe, under the radar in Asia, but it's a big group. It is what you would call an incumbent insurer or a traditional insurer. But having said that, there's a reason why I'm here, why we are talking about digital. We basically have decided in 2020, obviously we've done a lot of things in digital, but at the group level, we decided to invest in developing capabilities in digital platforms, for looking at digital platforms as the next distribution channel for us, next to agency, brokers, and banks. And we would like to replicate our success with bancassurance, which has been our biggest success over the past 20 years. We would like to enable our operating companies to become the preferred partners of choice for digital platforms in 5 verticals: digital financial services, e-commerce, telcos, online travel, and health. And to do that, we basically are investing in developing capabilities, assets, and capabilities at the group level that we share across the group, both in Europe and Asia, in partnership development, products and pricing, tech and integration, sales performance optimization, and reinsurance. So those are the 5 areas where we believe there is a gap at most of our operating companies to actually achieve that status of preferred partner of choice. And for tech and integration, we've been working with InsureMO, with eBaoTech, who have been chosen as our strategic partner. The setup, one of the reasons, there are many reasons why we chose to start working with eBaoTech. One of the reasons is that the setup is scalable. You can start small at a relatively low cost and scale up from there. The architecture is conducive to actually developing assets locally and then sharing it at a group level. They cover both Europe and Asia, life and non-life, and health. So basically, the proposition was quite compelling. I will probably stop here as an introduction. Hand it over back to you.
Thank you, Vala. Well, I want to add one thing. We actually interact with the Aegis, used to be 40s, more than 20 years ago, when they brought a bank card to actually many Asian countries. So in terms of embedded insurance, bank card, I would say is a great success. But of course, now it's going to be at a higher level. But in a sense of leveraging ecosystem, Aegis is one of the most kind of very clear thinking insurer, in my view, that has very targeted verticals that they want to be the partner of choice. So that anytime you need insurance, Aegis is the right partner to go to, right? So for us, this is a very interesting dynamics. We see so many ecosystems. We power car dealer platform, credit card platform, payment platform, travel, telco, employee benefit. All these ecosystems are starting to pay a lot of attention to insurance as well as I call the pan insurance, the protection, everything. But they are more and more dominant in the sense that they are treating insurance company as just one of the suppliers. And they source many, many suppliers. And more importantly, they actually oftentimes dominate in how the sales and service are going to be done. So as a carrier, are you concerned? Are you losing control of this whole business?
Maybe it will be controversial, but no. I think what we see is, let's make a parallel with bank assurance, right? I think banks were not in the insurance game 30, 40, 50 years ago, not in the way they are now. Have they influenced how insurance is being sold? Have they influenced what kind of products we're selling? Absolutely, yes. Are they really in the lead? Do they own the insurance vertical? Probably no, right? So I think there's a relationship between the banks and the insurers in a way that the partnership actually works out well for both. Obviously, there are commodity products that will be replaceable, easily replaceable, and as such, you will see more capacity provider kind of competition. But it's kind of a race to the bottom. So that's not where we see our future with digital platforms. I'm basically, when the question was, am I worried, am I concerned? From the perspective where we see new players come in, not only on the banking side, neobanks, but also the neo-insurance side, where the companies take a license as an MGA, as a broker, sometimes even they go all the way to an insurer license, you will see that they are going for the new products, the new propositions, new risk pools, right? Not the traditional risk pools. You don't see many of these examples we're talking today and tomorrow. You will not see a lot of the examples going for term life for the same sort of 20, 30-year horizons and the sums assured that we are talking about. We are seeing much shorter terms, much lower sums assured, and different propositions. And in that respect, I am concerned because these are obviously growing risk pools where we are not participating today or not participating enough today. So in terms of product development, in terms of understanding the pricing of those products, understanding the claims, building the claims experience expected as well, since they're digitally distributed, the claims will have to be digital as well. That's the area where I'm a bit concerned.
Yeah, let me kind of provide a bit of angle also. You're right, for a lot of channels that exist for many years, say bank car or car dealers or brokers, the impact to insurance has not been big for many years. Why? Because it was not connected. It was isolated. So in a way, I sell a policy, I pass you a piece of paper, you do whatever you want as a carrier. So in that sense, carriers still have full control. But as we move to the connected world, everything is real time, everything needs to fit a good journey for consumers. I think there is a game changer. The banker is an example. We already power a lot of banker where everything's real time. In this kind of situation, banks are much more adamant in terms of how things are done, including now we have actually banks starting to do claim loss report and all these other things. So that is a different situation, I think, due to digital, due to connected, right? So all the past experience may not be a good guide in how the future will come. In terms of the selling, servicing, everything, insurance company used to have a say, but now it's going to be very dynamic. A particular partner wants to do this way, another partner wants to do the other way. A carrier oftentimes has to respond to kind of fit, right?
Now, actually, what we're seeing also with our bank assurance partners, and I don't want to have this session totally about bank assurance, but since they are also part of our first vertical, digital financial services, banks have moved down the digital transformation journey much earlier and much faster than insurance companies, right? So our bank assurance model is evolving with them as well. And we are seeing all those trends that you're saying about real-time connectivity and so on and so forth as well. So if you look at the bank branch numbers, if you look at the foot traffic going to the bank branches, that model that really made us big and successful is not going to help us sustain that success going forward. So we need to follow the digital business model of the banks as well. And in that respect, we see that the banks themselves, when we're talking about embedded insurance, we very often forget that there's embedded finance, right? So embedded insurance is part of something bigger, getting embedded. Banks they're having exactly the same issues as we do. They are getting this intermediated by the neobanks, by the online financial management platforms, and so on and so forth. So we do see the need, and we're investing, exactly that's why we're investing in products and pricing, tech and integration to be there when our partners are ready. Now, some partners are saying, yes, we are ready, we want to go there, but when it comes to data, which is the underlying oil for this machine, they are either not ready to share that data, which is killing for the connectivity business case, or there are regulatory constraints with GDPR and other data privacy considerations. So I think us as an industry, we have not really figured out the winning operating model yet. We are working hard on this.
Yeah, so one of the concerns, obviously, before the insurance company control a lot of things, therefore the differentiation, in a way, are there. If everything become real time, everything is automated, the experience almost is the same at a higher level, but in a way, hard to differentiate. So from your angle, GS, how do you continue to be able to differentiate yourself, and this differentiation are sustainable and defendable? How do you create that?
Yeah, it's a continuous investment, right? I mean, we are talking about partnerships, and we very often compare partnerships to marriages. You have to continuously invest in these relationships. And for us, I think one of the big areas of investment is products and pricing. Again, what I mentioned as a concern in the first part of our conversation, I do share that as a concern, right? So we are investing both on the life side and the non-life side in new propositions that are easily embedded in digital journeys, in various journeys, in various verticals. Obviously, the other area is, well, it's not even differentiation now, but it's a hygiene factor. Yeah, you got to have the tech, you got to have the APIs, the microservices, and again, that's where our partnership with eBiotech and InsureMO comes into place. The third area of differentiation, I think, is sales performance optimization, understanding the data behind the numbers. really having the right product with the right partner and on the right tech is not going to make the needle move, right? So we're going to still not see the huge commercial successes that everyone expects. We need to understand how to embed the product, how to nudge the customer to click through or to click yes. And that requires an investment not only from our end, but also from the partner, because obviously we are working with the data of the partner. So, and in that respect, we're investing in partnership development as well. I think we're not only recruiting new partners, going out there and talking to telcos, to neobanks, to e-commerce platforms. I think we're doing actually quite a good job. I forgot to mention in the beginning that, you know, 2 of the recent sign-ups we've had is Amazon UK, so that's sort of a big name out there for us on the e-commerce vertical. And Singtel in Singapore, if you know the Singaporean market, it's the market-leading mobile operator in telco, has signed a 3-year exclusive deal with us. So I think the fruits of our investment, the initial fruits are already seen, can be seen. Partners do see us different from the rest, but of course there's a long way to go and a lot more to do.
Yeah, just one thing that, you know, a lot of carriers still think as almost like entitlement is the product pricing. So I'm also challenging that potential thinking, you know, even on pricing and product design, will ecosystem become even better than a carrier in terms of knowing what are the risks they should protect and how to price those risks?
It's the question, okay, you need insurance, but do you need insurers, right? And I think a lot of the intellectual property of how you price risk, how you manage risk, is the cost of doing business in insurance is coming rapidly down. And that's why we see actually so many new ventures and new carriers setting up shop, not only in Europe, but also in Asia. It remains a regulated business though, right? And especially when you look at the larger sums assured, the longer terms, people will need to have the certainty that the company they're doing business with will be around in 5 years, 10 years, 20 years, and so on and so forth. I don't have a straight answer to you, right? So I think there will be a healthy competition between new entrants into the insurance space. I think the function of pricing the product will remain within the insurance scope. If new players feel they have better ways to price the risk, they will enter that arena as an insurer as well, or as an MGA, right, where you can actually have that pricing function. And that's already happening, and that's really good for shaking up the industry a little bit.
Yeah. Well, I mean, obviously it's a licensed industry. The regulators will force you to have a role there. The only question is how big is that role, right? In terms of pricing, nominally the product always owned by the carriers. But again, as the ecosystem has more and more data, they potentially have better knowledge on those risks than the carriers. And they could create their own pricing and they say, you want take it or leave it, right? I mean, that is a potential outcome for some situations.
Yeah, you know, there are already examples for this, right? There are companies, I think we had a previous speaker talking about telematics, where there's a score calculated, and at the end of the day, the insurers are basically told, okay, for this score, give us your best price, right? And there's a panel and so on. This is, I think this remains sort of part of that business development game now, where insurers and insurtechs will collide. At the end of the day, this is also a concern, as I mentioned, from a products and pricing perspective, that we have been focusing too much on our traditional business for too long. And for now, we don't feel probably the pain and the threat that much on the fringes of the industry, because new types of risks, new risk pools are not that big compared to our traditional risk pools. But we see the growth rates and we see the change in consumer behavior, in patterns in terms of trust towards digital platforms, right? If you trust them with your money, will you be trusting them also with your insurance, right? If you use them for payments, for keeping your money on the digital wallet, for helping you to navigate, for helping you to with your health, staying healthy. Obviously, insurance is just a micro step, incremental step in terms of trust.
Yeah. So all this, in a way, related to one of the key things that we want to address, which is technology. When the industry is in this kind of dynamic and very fragmented kind of situation, every channel potentially demands something different, which I call it personally 3V that is exponentially bigger: volume, variation, and velocity. Everything needs to be fast. Also, you need to create all kind of variations for different channels in terms of your product, your process, everything. Technology will become very different from the past. So that's why we are pushing this middleware approach, where basically you have a platform to develop anything you want on the fly, instead of you have a solution that is already developed. So that is our thinking. So what, from your experience, what do you think is the technology trend?
I think I shared that view, and obviously that's why we're working together. In many markets, we can't afford just throwing out our legacy systems from one day to another.
Yep.
So we were looking for a solution which we can set up in parallel next to our legacy platforms, core systems, ERPs, etc., that will enable that rapid go-to-market, agile go-to-market with new digital products, with a lot of A/B testing, with a lot of variations, sharing that across various geographies as well. So the technology moving from on-prem to the cloud, again, this new architecture with APIs and microservices is really key. But it's only one of the 5 factors I have mentioned, right? So I think we need to get our partners in line, we need to get our products and pricing in line, sales performance optimization and reinsurance will need to be there as well. But one of the core things we had to fix last year when we started rolling out our strategy was actually tech and integration.
Yep. So one of the things we observe, obviously, a lot of those illusions proved to be illusion very quickly. A lot of partnership became not very interesting very quickly. So how do you try a lot of things with a low cost and low kind of involvement, so that you can do a lot of so-called fail and fail fast? If the cost of failing is too high, you cannot afford to fail too many times, right?
Absolutely.
So we see that as inevitable. A lot of talk about the kind of embedded insurance, many of them will not be productive eventually. So how do you, when you select your partners, what are the criteria, or what are the ways you reduce the rate of failure?
Yeah. So we prefer partnerships on an exclusive basis, at least on a product or category basis, because exactly what you said, there will be a lot of innovation, testing involved, and that will require time and money. Even if the tech platform allows it to do it relatively cheaply, cost efficiently, there will be a lot of effort involved. So to do that and to justify that, we will also like to reap the benefits of that going forward. So that sort of exclusive partnership or exclusivity at the product or category level is absolutely important for us. And on top of that, we're looking for partners, obviously, from those 5 verticals proactively, I mentioned already. And we're looking for partners who are mature enough in terms of data, right? I think data without data and access to data and developing a joint understanding of data, this is not going to fly. I'm not talking about, just to be clear, I'm not talking about embedding travel insurance at the end of a flight ticket booking, right? So that's sort of, we've passed that. We know how to do that. This isn't the case I'm talking about. I'm talking about how we're going to close the protection gap other than embedded insurance with credit life products. How we're going to help people save for the rainy day or for other saving goals. How we're going to help them with various risks in the non-life side or on the health side, that we haven't actually been selling online in a digital way without asking dozens of questions or even hundreds of questions, sending them off to medical examinations. I mean, the customer journey, even on the new business side, can be quite tedious, right? So we need to work with partners, not only on the distribution side, but also on the tech side. So we need to have an ecosystem of tech, insurtechs as well, helping us there. And then let's not forget post-sales, right? So I think there will be a moment of truth. There will be a claim coming at some point in time, and we will need to deliver at that moment of truth as well. So we are looking at working with partners in that respect, making that journey end-to-end as smooth as possible.
Thank you. I think we are near the end. Any closing comment from your angle in terms of embedded insurance and the ecosystem relationship, the big picture down the road?
Wow, and that in 2 minutes. No, I think it's an incredibly exciting time. I've been in digital banking and digital insurance for the past 20 plus years. It's very exciting to see how the industry is transforming. And I have the benefit of seeing the examples in Asia, in some of the markets, which are way ahead even of the US or Europe. So there's a lot of disruption coming our way. I'm quite excited to be working with you guys and with our distribution partners. I'm happy to be here and take any questions or meet you after the session if you have any.
Thank you. For us as well, we are very keen to work with anybody in this whole industry, carrier, channel, insurtech, other tech companies, to really create a very flexible infrastructure platform for fast innovation, make insurance easy together. Thank you very much.
Thank you.